Anurag, you can unmute yourself and go ahead.
If I share the link, I will post in the groups.
Perfect. Anurag, you are able to speak. I think you are unmuted, right?
All right.
Perfect.
Yes, sir. It's in the chat now.
So good evening, everyone. Thank you very much for joining today.
I think mute everyone now.
We have muted Anurag. We have lost you. I think there's a network issue.
No, it's pretty much there. I mean, I can.
Okay, we can hear you. Your screen is frozen. Yeah.
Yes, you can go ahead.
Please go ahead. Your screen is frozen, just like that. Please go ahead. Perfect.
All right. So good evening, everyone. Thank you very much for joining today's session. It's going to be very, very interesting. As we all talk about economic substance regulation throughout the UAE, the nation wants to know what's there new into the economic substance regulation. So it's a cabinet decision number 57, and let's look into what's new into that. There's a lot of changes has come into picture. Effectively, the new assessing authority that have been added to the entire thing, and what we have seen in the past when the economic substance regulation was announced and implemented earlier this year, we have seen that different regulatory authorities have had their different dates, their different interpretations, and that's how the entire business community across the UAE was under the dilemma as to what should ideally they do. Whether the economic substance regulation applies to them. If applies to them, do they need to file notification? If not applies, do they need to file the economic substance notification? Does branch fall within the ambit of it? Does free zone fall within the ambit of it? Every free zone will having different sort of rules. So if I have an entity in mainland and I have an entity in subsidiary or a branch in another free zone or a financial free zone, what should ideally be done in that relation? And basis that, most of the regulatory authority have done the implementation their own way, and which leads to a lot of the data differences, and ultimately it resulted into repeal and redefined ESR, which is the new cabinet decision, which today our speaker of the day will gonna share more insights on that. And besides that, another important aspect is that, look, the businesses, there was a lot of, clarity was missing with respect to the, trade transaction, with respect to the lease finance business. So we would love to listen. Our speaker of the day, C. Nilesh Asher, partner in KPMG for the tax. So we'll hear from him what the new ESR is all about, what it has to offer for businesses, and how the businesses should prepare themselves to adhere to the new regulation and file the compliances. So thank you very much, CA Manoj Agarwal, our executive committee member, to introduce and to bring CA Nilesh Asher to the session today. And thank you, Chairman, for always bringing out such great initiatives for our members to really unwind their knowledge and learn more about the regulations in the UAE. And this is going to be a very key session today. So without a further ado, I would like to ask our Chairman, C. Anish Mehta, for Chairman's address. Over to you, Chairman.
Thank you, Anurag. Welcome, everyone. Good evening to all the participants. As I can see, as we speak, it's 330 people attending this seminar. This itself shows that how important the topic is and how important this session will be. So amendments to ESR, and why I think that is more important, because if you open a LinkedIn, each and every firm is doing the session on the amendments to ESR. So it becomes more responsibility for the chapter, who is basically involved in the technical and professional development of members, to do this session at the earliest. And today we are here to do the session. And we'd like to welcome CA Nilesh Asher, partner tax KPMG, who will be giving his insights on these recent amendments. I would like to thank CA Mohandas Balakrishnan to give the coordinates of Nilesh Asher Saab, so that we could have connected with him. And thanks to CA Manoj Agarwal, our executive member, to coordinate with Nilesh Asher. And very soon he will also play some poll questions also to test your preliminary knowledge. And later on, we'll also handle the question and answers once the Nilesh finishes his presentation. We will have ample time. It all depends up till what time the Nilesh energies last. So adequate time will be given. What I think, and I attended one of the sessions earlier of amendments, I think now they have linked more this to the IFRS. So the IFRS professionals' work will also increase, because one of the requirement is to file the consolidated financial statements. And therefore, as of now, a lot of free zone companies and all, they were accepting separate financial statements. But now the need for consolidated financial statements will be more, and therefore the work for audit professional will also increase. So which is a great thing. Giving us some brief, on 25th, we have a kind of family event. It will be a very interesting, one of its kind, which someone has muted me. I don't know who is playing with this. Anyways. So on 25th, we will have a family event, and the session will be one of its kind. And along with entertainment value, it will also have a lot of learning value. And soon, in a few days' time, we will reveal what is going to be there. But please block your date on 25th of September, 4 to 5:30. And we have specifically kept this time so that you can enjoy IPL from 6 o'clock. So with this, I welcome once again all the participants. And I would like, before introducing Nilesh Bhai, I think Manoj, you will play poll, or should we go with introduction and then poll?
Go
But
with
over to
introduction.
you,
Poll
Anurag.
will be after Nilesh session.
Oh, it will be after the session.
Yeah.
Okay. So over to Vice Chairman Sundar Nurani sir for the introduction of Mr. Nilesh Asher.
Good evening, Chairman Saab. Welcome to all of you. Good evening to all of you. I hope all of you are doing well and keeping safe during these testing times. Happy to introduce Nilesh Asher. He's a tax partner with KPMG based in Dubai with over 24 years of Big Four international and Amended tax experience, advising clients across Middle East, India, UK, and Europe, and has been based in Dubai since 2012, where he was previously leading KPMG's tax practice. He has significant experience in advising a wide variety of clientele on international tax matters, cross-border tax structuring, M&A tax, economic substance advisory, tax governance, etc. He has an extensive experience in helping businesses manage tax risks, effective tax rates, and improve their tax process in the ever-evolving business and transactional environment. He started his professional career with EY in India, Arthur Andersen up to 2002, and was relocated to EY London to set up the India tax desk with business development, tax structuring, etc. He is a regular speaker at seminars, conferences, client workshops, and various industry forums, and has contributed to many thought leadership and views on tax matters in print and television and radio. There was a complaint from many of the practitioners in UAE that after the chapter took up these short sessions, their income is getting reduced. Probably this is something which is good, because members are getting more knowledge from all the speakers. But our intention as a chapter is always to give technical updates which is very relevant and on a prompt basis. This I was saying in a later note. With that, I request all of you to join me in welcoming our speaker of the day. Thank you.
Nilesh Bhai, I will just take 2 more minutes before you
Sure.
start, because I would like to welcome Miss Amna Al-Mahri from the AAA, the General Manager of AAA. Ma'am, most welcome. And AAA, as you know, is into, again, development of the professionals, particularly to the accounting and finance professionals. So in the recent past, we have been communicating with them to see how best we can mutually coordinate, and maybe we can do some events together also. So Miss Amna Al-Mahri and Mr. Akram, we had a meeting with them, and we would like to welcome in this event. Ma'am, if you want to unmute yourself and say a few words. Mr. Akram, if you like to. We have to.
Can someone unmute Akram?
Yeah, now he can himself.
Sir, you can unmute yourself and speak.
Yeah.
Thank you very much for this great opportunity for us, and it's an honor for us to be part of this CPD session and the evolving subject as economic substance, this program. So we welcome all of you to have very strong relations with the Accounting Auditor Association, and also to cooperate several events and collaboration and open membership that we are planning to work with ICII. So thank you very much for this opportunity, and thank you.
Most welcome, most welcome. Thank you to both of you for joining the event.
Yes.
Thank you, sir.
Miss Amna will speak.
Ms. Amna, you can unmute yourself and speak.
She's unmuted, I think. Fine, then we'll see later and we'll start with the session then. Nilesh bhai, over to you.
Great. Thank you, everybody. Thank you, Anish ji, Sundar, for the lovely and kind introduction. I should have removed reference to 24 in my CV. Probably lets my age out. So I need to be careful and correct my CV for future. Manoj ji, thank you for coordinating to get this session set up, and Anurag for kicking this off. It's my privilege to talk to fellow chartered accountants on a very important subject of ESR, which has really taken the profession and the country in the UAE by storm. It kind of, unlike VAT, where businesses had time to prepare for VAT implementation, ESR was really sprung on us as legislation, and the legislation came much before the regulatory authorities perhaps were even fully prepared to deal with the obligations, which did create, as Anurag mentioned, did create a lot of confusion amongst the business community in terms of what they need to do, when they need to do, and whether really the UAE was going to be serious about implementing the economic substance regulations in the form in which it was issued. I'll just get my screen up. Hopefully you can see the screen.
Yeah, it's visible.
It's
Yeah.
visible.
So and I do understand that the institute and the Dubai chapter of the institute has already conducted a number of sessions on the the erstwhile economic substance regulations. We're going to talk about the new regulations that came in on the 10th of August, Ministerial Decision 57, which repealed and replaced Cabinet Decision number 31, and with retrospective effect of 2019. And it does throw some of the challenges. So I'll go through, I'll try and decode the new ESR law. What I did want to cover is give the audience, and I'm conscious there are over 330 odd members. So for the benefit of everyone, I thought I'll do a quick recap.
407 now. 407 members.
407, excellent. Sorry, my screen is on, so I can't see the numbers. That's great. So I do want to bring the fellow members up to speed on some of the background to what the old regulations contained. Very briefly talk about the scope of the regulations generally, and then spend some time talking about the new regulations, what has changed, importantly, what it means, and what is it that businesses need to do going forward? What is it that us as professionals and professional advisors, those that are advising clients, how do we try and go about dealing with this subject? I think it's fair to say that given that the regulations are new and untested, and they're new and untested not just in the UAE but also in the 10 odd jurisdictions that have introduced economic substance regulations. All of them have introduced this in parallel. So there is limited precedence on how regulators and tax authorities are dealing with this subject in other parts of the world. So that does bring some element of uncertainty. But how best can we prepare ourselves, our clients, our businesses to mitigate any risk of non-compliance? We'll try and talk a bit about that in the session. And then finally, a Q&A. I'm sure there will be lots of questions that we will get from the audience. I will try my best to address as many as I can, and will appreciate your understanding and patience if I may not be able to get to all the questions to your satisfaction, but I will certainly try my best. So moving on to the background. So lots of clients, when I was speaking to them on the regulation, said, Nilesh, why have they changed it? Why has the regulation changed? They introduced this just recently. We went through all the rigmarole of entity classification and notification filing. What's happened? And the reason for this is really that, as you are all aware, UAE was originally on the EU's blacklist. It came off the list, went back on the list, and really based on UAE's commitment to the OECD, it had issued the original economic substance regulations, the cabinet decision number 31. Since then, there has been, and if you look at the original regulations, there were a number of provisions that were fairly unique to the UAE alone. If you looked at the 10 odd countries that have introduced economic substance regulations, UAE was probably the only one that had, for example, the exemption for government-owned entities. 51% or more government-owned entities were entitled to the exemption, and that was the only category that was entitled to the exemption. There were certain other definitions, particularly on distribution and service center business, which was again not in line with the other countries' regulation, and again not in line with the spirit of BEPS, possibly or arguably not in line with the spirit of BEPS as was envisaged, and perhaps a drafting oversight. And based on feedback from the OECD and EU, they've had to issue the new regulation, again with retrospective effect of 1st of January 2019, which does create the element of uncertainty, confusion, and requirement to go back to the drawing board as far as the work that's already been done so far. And really, I think going forward, what's planned for the UAE, based on its commitment to the OECD, UAE will be subject, along with the other countries, to a peer review process where the OECD will monitor the issuance of legislation, the effective implementation of the economic substance regulations, and how the UAE as a jurisdiction will continue to implement the economic substance regulations, not just in law, but also in spirit. And this needs to be done on an ongoing basis. So I would expect there to be continuous guidance, updates to FAQs, precedents, clarifications that we may get from the Ministry of Finance based on feedback from the OECD and the EU, and based on the peer review process. So certainly one, I'm sure this is not going to be the last session on ESR by the ICAI chapter. In terms of the regulations, I think it's important to look at, and it's fairly clear, as you can see, a number of guidance, regulations, ministerial decisions have been repealed. And we now have a new set of regulations that we need to all refer to, which is the Cabinet of Ministers Resolution number 57 of 2020, the Ministerial Decision 100 of 2020, and you've got the updated FAQs and flowchart on the Ministry of Finance's website. That is now the new kind of set of Bible for us from a UAE standpoint to refer to on the economic substance regulations. If you look at the new ESR in summary, and I'll try and go through a number of these elements in my presentation going forward. But you have you need to first consider who is in scope of the regulations, and there is a new definition of licensee which we will talk about. So if you are a licensee, only then you are in scope of the regulations, otherwise the rules do not apply. You then need to consider whether you're an exempt licensee or not, and again there has been an expansion in the list of exempted licensees category, which needs to be looked at. If you are an exempt licensee, you only have an obligation to notify, along with sufficient evidence that needs to be submitted in order for the authorities to confirm that you are entitled to the exemption. Moving on, if you do carry on a relevant activity but earn income from that activity, it's only then that you are required to submit the economic substance tests. And the three broad tests relate to the core income generating activities being carried on in the UAE, direction and management from the UAE, and the adequacy tests being demonstrated in the UAE. And I don't intend to spend too much time on the tests because the tests haven't changed. And I understand this may have been discussed in the previous ICAI sessions, and really nothing has changed on the tests. So I don't intend spending too much time on that. Once you satisfy once you determine whether you meet the test, if there are any gaps, you remediate those gaps before the return, the ESR return is filed. And once that's filed, you then really go into the review process, where post-filing of the return, the regulatory authority will do a preliminary check on the accuracy of the information submitted. We now have Federal Tax Authority that has a critical role to play in performing the assessments and audits of the substance test, and rightly so. I think they're the right administration and the right body to be involved in this process, and I think is certainly a welcome move by the Ministry of Finance. And then there are penalties associated with non-compliance, which we will talk about. I think the important dates that are relevant for all of us is that all notifications that have been filed on or before 30th of June 2020 do need to be refiled on the Ministry of Finance portal. And then the first reports are due on the 30th or 31st of December 2020 for the financial year ended 31st December 2019. And the FTA has 6 years from the end of the financial year to conduct an audit. So we do need to be mindful that any documentation that forms part of the economic substance return, any backup information needs to be maintained for a 6-year period. Some of the highlights of the new ESR, and some of which we'll talk in more detail. As I said, from a scope perspective, there is a new definition of licensee, and the exempted licensee category has been expanded, which I will talk about. Importantly, the government entities are no more exempt under the regulations, so they need to treat and perform the obligations no different to a regular licensee, a regular entity in the UAE. There are amended definitions of in the context of connected persons, groups, relevant activities, which changes some of the classification which may have previously been performed on certain categories of relevant activities. There's been helpful clarification on the treatment of branches, both UAE and foreign branches, which we will talk about. Federal Tax Authority being inducted into the review process, which, as I mentioned, is a welcome move. From a technology perspective, there will now be a new portal where all notifications and reports will be filed, and the Ministry of Finance, the FTA, the regulatory authorities will all have access to the portal. And this is really important because you will now have a standard set of notification and reporting format, and a standard mechanism and process to submit the information to the authorities. Whereas I'm sure we have all experienced absolute uncertainty and to an extent chaos as far as the initial filings were concerned, in terms of what was the right form and what was the right mechanism of submitting the notifications to the authorities. So this again is a welcome move, welcome provision in the regulations. As I said, no changes to the ESR tests, so those continue as they are. Just a very quick recap on the relevant activities. There are 9 categories of relevant activities, and you can see most of them. There are changes in the definitions on some of them, which we'll talk about in a bit more detail. But you've got distribution and services center business, where if you purchase goods or services from a foreign connected person, and if you resell those goods or provide services to foreign connected person, they are in scope. Moving on to holding company, and we've got a number of those in the UAE, where the sole function is acquisition of shares and earning of dividends and gains. They are subject to reduced requirements, so nothing changes. You've then got IP business. There's a definition change in a high risk IP business, which is helpful, and we'll talk about that. Lease finance business, where as we're all aware, intercompany loans provided by UAE companies, both to related and unrelated parties for consideration, is in scope. And then you've got HQ business, where again a number of those are present in the UAE, where group activities are coordinated from the UAE by UAE headquartered businesses or businesses which perform a regional coordination role for group entities. And then you've got banking, insurance, investment fund management business, and insurance business. Nothing has changed on this, so I don't intend to spend too much time. Happy to take any questions on that. But I think the only point I'll make on relevant activities is that all of these have been referred to by the OECD as geographically mobile income, which has the potential for creating BEPS opportunities. So not all activities are in scope. It's these 9 activities, and there are definitions for each one of them that are in scope of the regulations. Very quick recap. There are 3 tests that need to be satisfied if you are carrying on a relevant activity. The first is whether your entity is directed and managed in the UAE, and there is extensive criteria set out as to what is meant by direction and management, with a particular requirement for there to be board minutes and board meetings taking place in the UAE, board minutes being documented, quorum of directors to be physically present in the UAE, the board resolutions to be signed by the directors, some evidence of deliberation and discussion of the board meetings to be documented, and so on and so forth. The second test is around demonstration that the core income generating activity in relation to a relevant activity, one of the 9 relevant activities, is being carried out in the UAE. And again, these are activities which are of central importance to the earning of income from relevant activities. And while there is a list given for each relevant activity, really this is not an exhaustive list, but an indicative list for businesses to adhere to. And the third test is around the adequacy test, where businesses carrying on a relevant activity need to prove that they have adequate qualified full-time employees, adequate operating expenditure, and adequate physical assets in the UAE, relevant for the purposes of carrying on the relevant activity that they fall under. As I said, no changes have been prescribed to these tests under the new regulations, so I don't intend to spend too much time on that, and would like to now get focus on what the changes are. So starting off, the first one, there's changes in the definition of licensee and an exempted licensee, and as you can see on the screen, under the old regulations, the licensee included a natural or a juridical person that was licensed to carry out one of the relevant activities. This created a lot of confusion because the focus shifted immediately to what is the nature of license that an entity holds and what is prescribed under the license, and whether the license, what is mentioned in the license really drives whether you are in scope of the relevant regulations or not. Although the guidance did clarify that you need to look at a substance over form. But that, along with a natural person in scope, has now been amended to, under the new regulations, for a licensee to be only one that's either a juridical person, which is really a corporate body having separate legal personality, or an unincorporated partnership, which does not have separate legal personality, like a limited partnership, limited liability partnerships, general partnerships. But importantly, those that are registered in the UAE and that carry on a relevant activity. So not all businesses are in scope. If you are, and no individuals are in scope. If you are a juridical person or an incorporated partnership, but those that carry on a relevant activity in the UAE are now in scope. An important clarification is that natural persons, sole proprietorships, trusts and foundations, and there have been recent introduction of these types of structures, trusts and foundations in particular, that have been explicitly carved out from the scope of licensee. We then look at the exempted licensee definition, and as I said, the only exemption was for entities that had at least 51% or more direct or indirect government ownership, either by the federal or the emirate level government. And this exemption was only there in the UAE, as I understand. This has been withdrawn and has been replaced with a certain set of exempted categories that are in line with international legislation on ESR. Importantly, funds, investment funds, and any SPVs owned by investment funds are exempt. UAE branches of foreign companies whose income is subject to tax in the parent jurisdiction, and we'll talk about all of these in a bit more detail. Licensees that are tax resident outside the UAE, so they may be incorporated in the UAE, but by virtue of other criteria such as central management and control, they may be regarded as tax residents outside the UAE, so they are entitled to the exemption. You then have UAE, a helpful clarification is exemption is for UAE, wholly UAE owned businesses that do not have any other entity outside the UAE, are not part of a multinational group, and those that carry out domestic activities only. So pure UAE owned and operated businesses are out of scope of the regulations or are eligible for an exemption. And then there's a category for any other licensee which the Minister of Finance may include under the exempt license category. But this change, this important change, does bring about a relook at what has been historically done by these types of entities that are now entitled to the exemption. But the important bit of being regarded as an exempted licensee is that in order to be eligible for an exempted license, to be eligible as an exempted licensee, they do need to file sufficient evidence along with their notification form in order to prove to the authorities that they are entitled to one of these exemptions. And if you claim to be a foreign tax resident under that exemption, then you need to prove the tax. You need to attach the tax residency certificate or a letter from the foreign tax authority in the country where you are claiming to be a tax resident. You need to attach that with a notification. If you're a branch of a foreign company that claims to be subject to tax in the location of the parent, you do need to include the corporate tax return, which does show that the income of the branch is reported in the tax return. An important requirement for exempted licensee is that the moment you claim to have an exempted licensee category, you will certainly be verified to confirm the exemption. And if you do meet the exemption, then you're not required to meet the ESR tests, and you do not need to file an ESR report. But by being exempted does not mean you need to do nothing. If you are carrying on a relevant activity but entitled to the exemption, You do need to submit the notification with all the information that's prescribed, including the relevant activity classification and supporting evidence to prove that you are entitled to the exemption, failing which you will be considered as a regular licensee and subject to the full scope of ESR. The other point to note on exempted licensee is that the Ministry of Finance will most certainly, and it will definitely exchange information on the exempted licensee category with the tax authorities in the foreign jurisdiction where you are either claiming to be a foreign tax resident or where the head office or the parent entity of the UAE branch is located. And if you're not able to, so this will certainly happen. So you would expect inquiries from the foreign tax authorities if you've claimed an exemption under these two categories. So just as an example, elaborating on some of these exemptions in a bit more detail, if you are an investment fund that is registered in the UAE, then both the investment fund as well as any SPV through which the investment fund invests will both be entitled to the exemption, not the portfolio company into which the investment has gone. That will have to look at its assessment individually. But both the investment fund and its SPV will be entitled to that exemption. So what this really means is that if you have a holding company in the UAE that otherwise meets the definition of a holding company, but if that holding company is part of a investment fund structure, and there is an elaborate definition of what is an investment fund, and you need to be able to demonstrate that you are an investment fund through documentation or license that you may have received from the authorities. But any SPV or holding company of an investment fund is also exempt as an investment fund, as opposed to a holding company of a regular corporate structure, which will not be entitled to the exemption. You then have entities that are in the UAE, and I'll use an example, which claims that their tax resident or residence is not in the UAE. So in this example, in the middle one, you can see you've got a UAE company, but the central management and control of the UAE company is in the UK. And the UK regards the UAE company as tax resident in the UK and subjects the UAE company to tax on all of its income as a regular corporate taxpayer in the UK, no different to a UK company. In this case, the UAE company will be entitled to an exemption, but will need to prove that that it is a tax resident of the UK, in my example, and therefore a tax residency certificate or a copy of the tax return and so on and so forth will need to be attached along with the notification to claim that exemption. You then have the third category, where you have a pure domestic UAE business owned entirely by a UAE resident, and UAE resident has been defined as either a UAE national or a foreign national that resides in the UAE under a UAE residency visa. If they have a UAE business, then a pure UAE business, there is no other entity which forms part of the group from a consolidation standpoint, from a consolidated financial return standpoint. So in this example, company A is owned by a UAE resident. Company A conducts a relevant activity. Company A owns company B. Both are in the UAE. And that's the only activity that company A does. In this case, the company A will be entitled to an exemption and will have to prove through corporate structure and through other information that it only conducts a UAE business. However, if we take this example further, and let's say you had company B, which owns a Saudi entity, and let's say assume the Saudi entity does other activities. Neither company B nor the KS entity conducts any relevant activities. But the results of the Saudi entity are consolidated in the financial statements of company A, which includes company B and the Saudi entity. In this case, this group becomes a multinational enterprise group or an M&E group and will now not be entitled to the exemption. So this is important to look at, and it's important that these exemptions are looked at on an annual basis because circumstances may change, facts may change. You may be entitled to the exemption in year 1, but in year 2, due to certain change of facts, change of activities, you may no longer be entitled to the exemption. The next section deals with clarification on branches. I think this is really interesting for those that enjoy a bit of technical challenge on tax laws and interpretation. Really, the second and the third are the examples which are good ones. But the first one is more clarificatory, that where you have a UAE company with a UAE branch or a UAE branches, whether free zone or mainland. Previously, under the old regulations, there was a lot of confusion as to how many notifications need to be filed. Assuming they were all conducting a relevant activity, we had businesses taking position that 3 notifications need to be filed, businesses taking the position that all mainland entities file 1 notification, a free zone branch files a separate notification, or you file in both places. It has now been clarified that in this situation, where there's a UAE parent, you can file a single notification or a report which consolidates the activities of all the branches in the UAE, both from an income reporting perspective as well as substance perspective. So that's very helpful as a clarification. You've then got the situation where there is a foreign branch of a UAE company. And we've got 2 scenarios there, where the UAE company has a Saudi branch and a UAE company has a Bahraini branch. What the regulations say is that when the UAE company reports for economic substance purposes, it does not need to report the activities undertaken by foreign branches if the income of such foreign branches are subject to tax abroad. So in this case, the Saudi branch of a UAE company will be subject to a 20% income tax in corporate income tax in Saudi, and therefore the activities of the Saudi branch are not to be included when the parent company reports for economic substance purposes. Whereas in the other example, the activities, the income, expenses, etc., all the details of the Bahraini branch have also to be included in the notification and report of the UAE parent. What is subject to tax is an important criteria which we'll discuss in the next example, which is that of a UAE branch of a foreign company. Now, this is a very common structure in the UAE. You've got a number of branches of foreign companies in the UAE. Previously, this was not entitled to an exemption, but now the rules say that a UAE branch, that a branch is generally treated as an extension of the parent. So it's not a separate legal personality. But if you have a UAE branch of a foreign parent, then that branch will be subject to ESR as a separate licensee if it carries on a relevant activity, unless the income of the UAE branch is subject to tax. I focus on the word subject to tax, is subject to tax in the foreign parent jurisdiction. And the FAQs to this clarify that subject to tax means that the income is reported in the tax return of the foreign parent, regardless of whether it is otherwise entitled to an exemption, whether under domestic law or under a tax treaty. Now, in this case, you've got a mainland branch. In the examples that we have is a branch of an Irish company where in Ireland, the income is fully taxed of the UAE branch. In this case, the UAE branch will be entitled to the exemption. But if you have a parent company situated in Bahrain and a UAE branch of a Bahraini company, because Bahrain does not apply a corporate tax system, and therefore the income of the branch is certainly not taxable in Bahrain, this will not be entitled to exemption. So we do need to look at the parent company's domestic legislation. How do they treat income of foreign branch? Is it taxable? Is it taxable subject to exemptions? Is it exempt altogether? Is it reported in the tax return of the foreign parent? Is it included in the computation? Is it included in the notes to the computation? how is it reported to be able to make an assessment as to whether the exemption will be available or not going forward. Looking then at some of the amended definition. Sorry, I can see that there's a scribble on the screen. I'm not sure where that's come from, but
You have to disable annotations for that.
sorry, hold on. Okay.
On the top right corner, 3 dots, disable annotations for other participants.
Yeah, okay, thanks for that.
Okay, thank you.
Now, if we look at the changes in definition to a holding company business, what you had under the old regulations was that there was a definition of a holding company and the definition of a holding company business. And the definition of a holding company and a holding company business essentially had reference to what a holding company means in accordance with the law applicable to the licensee carrying out that activity. And what we looked at was that certainly for mainland companies, the applicable law for a company was the UAE Commercial Companies Law, and Article 266 of the UAE Commercial Companies Law, made reference to a company being a holding company is one that has majority ownership and voting rights in its subsidiary, and has subsidiaries either in the UAE or outside the UAE. What that really meant was that there was lack of clarification as to what happens to minority ownership. So if you have companies in the UAE that were set up as the second company to hold 1% shareholding, or you had minority interest in joint ventures, and that was the only activity that the company did, would that now be regarded as a holding company? And I think on account of the change in definition, which now requires a holding company only to be one that has as its sole function the acquisition and holding of shares and equitable interest, and only earns dividend from income from dividends and capital gains, what now appears is that even companies that only have minority ownership in other companies and earn dividends and capital gains from it will also now most certainly be within the definition of a holding company business, whereas previously under the old regulations, it could arguably be considered outside the scope based on how the law was drafted then. Moving on. You then have changes to the definition of connected person and group. So if you look at this under the old regulations, you had the definition of a connected person, which included a natural or juridical person who is related to one or more other persons through direct or indirect ownership and control. The reference to natural person has been deleted under the new regulations. And now a connected person is only an entity. So natural person is gone. It's an entity that forms part of the same group to which the licensee or exempted licensee belongs. And I lay focus on the word group because group was previously not defined, but is now defined under the new regulations. Just to mean two or more entities related through ownership and control, such that, and this is the important part, such that they're required to prepare consolidated financial statements. What that really means is that previously, if you were providing services to a natural connected person, and that connected person owned minority interest in your company, such that there was no consolidation, or such that it was through a chain that there was no consolidation, chain of entities where there was no consolidation, it was still regarded as a connected person. But now for it to be a connected person, it needs to be an entity, services provided to or goods procured from an entity, but only that entity that is consolidated or required to be consolidated from a financial reporting standpoint. So if you look at the example, we have a parent company in the UAE that provides services to two companies in Saudi Arabia. One is a 100% subsidiary whose results are consolidated in the books of the parent. And the other is an investment entity in Saudi, less than 50%, where the results are not consolidated. In this case, the services provided to the subsidiary in KSA, which is consolidated, the one on the left, will be considered as a service center business, but the one on the right will not be. So if the only activity of the UAE company was to provide services to that investment entity in Saudi Arabia, this would now not be a service center business, whereas previously it was also regarded as a service center business under the old definition. This is an important change and will mean that there is we do need to look at classifications for both distribution and service center businesses, because what's required in the distribution business is purchasing from a foreign connected person, and as I said, definition of connected person has changed. But the other important change for the distribution business is the requirement of physical importation and storage in the UAE has been deleted, and the requirement of resell outside the UAE has been deleted. Now, this, this is what this really means is that your transshipment or drop shipment models where goods do not enter the UAE territory will also now be in scope. And this is something which was always in the spirit of BEPS, according to me. And it was also a position that certainly we at KPMG were taking, where these drop shipment models, we had certainly advised our clients to categorize them in scope of the regulations. And this was also in line with the definition of a distribution business in other legislations, in other ESR legislations around the world. This is an important change. So where any of your clients or any businesses have taken the position that only if there is physical importation in the UAE will you be regarded as a distribution business, you certainly need to revisit that classification. And importantly, while previously you had to resell the goods outside the UAE to be in scope, and therefore only pure domestic sales purchased from foreign related party and domestic sales was outside the scope, you now have even domestic sales being in scope of the regulation. So fairly important change in the definition of distribution business. We then look at service center.
Nilesh, if I can interrupt, because your last slide, when you're talking about the holding company, I've received 2-3 queries, and I think it's better to tackle here than to take later.
Sure.
Because this talks about the consolidated financial statements. And in this part of the world, we don't have generally the parent subsidiary relationship. And we have all entities under common beneficial ownership. A, B, C, D, all owned by a common person. And most of the firms, they do the combined financial statements. So will that be covered in this, or that won't be covered in this?
So I think holding company doesn't require it. So the holding company definition does not require, it does not have the requirement of consolidated financial statements. The requirement is there more in connected persons in the context of distribution and service center business. So let's assume in this example, you're saying that there is no consolidation.
No parent company.
Parent company. But I think what is required is not whether they actually prepare consolidated financial statements. The term is references 2 or more entities are related such that they are required to prepare consolidated financial statements. And I think if you look at the definition, there's a similar definition in the country by country reporting regulations, which is actually missing in the new regulations, which says that for country by country reporting purposes, the entities are required to be included if they, prepare consolidated financial statements, or would be so required to prepare if the entity was going to be listed on a stock exchange.
True.
But that element is missing from this definition. So I think you need to go under local law. So if from a UAE commercial law perspective, companies law perspective, if on that common ownership structure example that you were given, if there is no requirement to consolidate,
there is no,
then you're not then you're not in scope. Then
Yeah.
even if services are provided amongst entities and there's no requirement to prepare consolidated financial statements, arguably you could be
It
out
is
of scope.
more from the owner point of view because he wants to understand the entire operations in one financials, and
Yes.
with that he can go to banks and other places.
Right.
But there is no requirement in IFRS as such. Yeah.
Correct. So if there's no requirement, then it's not in scope
Yeah.
as things stand today.
Thank you.
Right. So then we look at the service center business. I think the important change here is that, and you can see it in track changes on the slide. If you're providing services to foreign connected persons under the previous regulation, it had to be in connection with a business outside the state. So if company A provides services to company B, and those services were in relation to products being marketed in the UAE, as you can see in the example, under the previous regulation, XYZ Co could take the position that it is not conducting a service center business on the basis that the services were being provided in relation to ABC Co's business in the UAE. And therefore, this was not a service center business. But with the deletion of the text you can see in red, as long as services are provided to a foreign connected person, doesn't matter where the service, what those services relate to, they are now in scope of the definition. So the ambit and the scope of the definition has been expanded both for distribution and service center business. And again, this, what is in relation to a business inside the state and outside the state was always did create a lot of confusion, because you had to look at the nature of services in detail, who was the beneficiary of the services, where were those services consumed and used. All of those criteria had to be applied to see whether you fall in scope of this definition. But now, as long as there's services to a foreign connected person, bang, you're in scope, and you need to comply with the regulations. So it's made it clearer, but it's also expanded the scope of the service center business. Then we look at high risk IP. This is again an interesting one, and you can see there were two limbs originally to the definition of a high risk IP licensee. I presume audience has a fair idea what a IP licensee is, but for people's benefit, before being a high risk IP licensee, you had to be an IP licensee, and an IP licensee is one that earns distinguishable sources of income from the exploitation of an intellectual property asset. But once you're conducting an IP business, the question is whether you are a high risk IP, and there were two limbs to the definition of a high risk IP licensee. The second limb of carrying out the research and development function or the marketing and branding activity as part of state core income generating activity has been deleted. So now, as long as, let's assume you fall in the definition where you meet all of the criteria of part A of the definition, which is that you don't create the IP, you acquired the IP from a connected person, and you either sold the IP or leased it, or licensed it to a group company outside the UAE, then you are a high risk IP licensee. But you did not conduct the R&D. So in the example that you can see on the right, if there was a self-created IP that was licensed, or self-created or self-purchased IP, funded IP that was licensed, but the R&D and the other CGAs of branding, marketing is not carried on in the UAE. Under the old regulation, you would be a high-risk IP licensee, and what it means to be a high-risk IP licensee is that there is enhanced level of information reporting, enhanced level of substance requirement, and more importantly, as far as the presumption of meeting the test is concerned, if you are a high-risk IP, then the presumption is that you failed the test, the substance test, and you need to prove otherwise to the authorities. Whereas if you're a regular IP licensee, then the onus, the burden of proof is on the FTA now to prove that you do not meet the test. So I think it's an important change. And what this really means is that while under the old regulation, you were a high-risk IP, but under the new regulation, you've only failed a SIGA. A SIGA in relation to an IP business, So while you may still fail the test, you're not regarded as a high-risk IP licensee, because by being a high-risk IP licensee, there is automatic, in addition to penalties, is automatic exchange of information with tax authorities of the parent company and the ultimate parent company and the ultimate beneficial owner. So a subtle change, scope has been narrowed for a high-risk IP licensee, and the implication has changed if you do not carry out the R&D activity in the UAE. Now, this is another one which did create some confusion under the old regulation, which is on the meaning of relevant income and gross income. So if you look at the old regulations, relevant income was not defined. What was defined was gross income. Under the new regulations, relevant income has been defined to mean all gross income. So there's a slight circular reference here. So I'll go slow on this slide. Relevant income has been defined to mean all gross income from a relevant activity that is recorded in the books and records of the licensee under the accounting standards applicable thereto. So now the requirement for relevant income to mean gross income, which is recorded in the books of accounts, is important. If the income has not been recorded in the books of accounts under applicable accounting standards, doesn't matter if you've carried on a relevant activity and earned consideration therefrom, it will not be treated as relevant income, and therefore you will not be required to perform the tests. Relevant income again means there was a definition of, then there's a definition of relevant income to mean gross income, which was also there in the old regulations and the old guidance. The key clarification, I think if you can see, the definition is fairly similar. The key clarification under the new regulations is the reference to the fact that it is irrespective, it's gross income, and it's irrespective whether the gross income generates a profit or a loss from activity. So what happened was, under the old regulations, clients would, there were situations that you came up and clients had situations where there were cost recharges, for example, on a headquarter function. And those cost recharges were on cost and not on a markup basis. So often you would get clients and businesses trying to take the position that this is not, there is no income from the recharge because we never made any profit. This was done on a cost to cost basis. And there was no reference for there to be, there is no profit that we've made, and therefore there is no income from the activity. It is now clarified to mean there does not need to be a profit or a loss, as long as there is gross income, even if the payout is higher than the revenues and the costs are higher, you will be regarded as carrying out income from a relevant activity and will need to be reported. So again, an important, it's not a change, I think it's more a clarification, which is now makes it explicitly clear as to whether cost recharges are to be included or not in the definition of relevant income. Moving on to some of the administration requirements and some of the compliance under the new regulation. If you see this, I think we've talked about, I think the key change in the process is that the FTA has been appointed as the National Assessing Authority that will be responsible for conducting audits, assessments, appeals, levying penalties. This was previously the role of the regulatory authority and under the old regulations. Now the role of the regulatory authorities have been diluted. Their responsibility is merely to disseminate information about deadlines, due dates, collect the notifications and the reports, do basic accuracy checking on accuracy of the information submitted and whether the forms have been completed properly, and liaising with the licensee, and is really the interface between the licensee and the FTA. They also have the responsibility to check whether the exemption related documentation has been filed along with the notification and whether that meets the criteria and needs to report to the FTA. The FTA will be the one that will conduct the audits, assessments, and liaise with the licensees either directly or via the regulatory authority. And then you have the regular process, which was there under the old law, where the information would be shared with the Ministry of Finance, who would then share with the tax authorities of the overseas parent company location and ultimate parent company location, etc. All information in respect of licensees that fail the ESR tests, all high-risk IP licensees, all licensees that claim an exemption on account of tax residency outside the UAE, or in respect of branches of foreign entities that claim to be subject to tax outside the UAE. All of this information will be automatically and mandatorily shared by the Ministry of Finance with the tax authorities of the parent location and ultimate parent location and the ultimate beneficial location. And it's not a surprise, because if you look at all these categories of licensees or exemptions, they're really looking to get out of the ESR law by virtue of claiming that they are either taxable elsewhere or are subject to another jurisdiction's tax regime. And of course, those that have failed may be subject to consequences from the parent company's tax authority on either CFC income or other income under any anti-avoidance rules and so on and so forth. Other compliance matters, some of which we talked about, there will be a portal that will come up likely in Q4, maybe in November or early December, where all the notifications and reports have to be filed. Importantly, all notifications already filed have to be refiled for 2019. And as I said, it's not just refiling it. You need to refile it based on the correct classification under the new law. You then have clarification that going forward, all notifications have to be filed within a 6-month period of year end. So any notifications for the financial year ended 31st of December 2020 will need to be filed by 30th of June 2021. An important information sharing that's come in the notification is on the details of a parent company, ultimate parent company, and ultimate beneficial owner. Previously, this information had to be submitted in the notifications only if you were a high-risk IP licensee. That has been replaced, and now all licensees need to submit this information, and therefore just getting the necessary internal approvals and protocols in place to be able to share this information is something businesses should now be prepared for, regardless of the category of relevant activity. And I think, Anishji, you did mention about financial statements. So ESR report that has to be filed does need to include financial statements in it. Now, the only thing that is not clear yet, it does not use the word audited financial statements. It just says financial statements. Let's hope that clarification comes in due course that it's audited, to give some level of credibility to the information that is being submitted. But as things stand today, it's financial statements only.
If it comes audited, it will serve multi-fold benefits. First, the work will increase of the auditors. Second,
That's right.
the audit will be over on time.
Absolutely. Fair point. Fair point. Okay, and then the last bit is that there is clarification on compliance for entities undergoing liquidation. So I think some businesses may have been taking the position that let's get out of the ESR rules by putting the companies into liquidations, so they do not have to comply with ESR. It's now clarified that if you carry out a relevant activity even during the liquidation process, you do need to meet the ESR tests and make the necessary filings, notifications, and reports for the activities carried out during the liquidation process. Penalties. I think there are, if you see, penalties have generally been increased under the new law, and the element of subjectivity that was there from the old law and the scale that was there between 10 and 50,000 or 50 and 300,000 has been replaced by a flat fee of flat penalty of 50,000 in the first year and 400,000 dirhams in the second year, and with a possible license cancellation annulment for second and subsequent failures. There is a 6-year period to again, this is not new, but I just wanted to reiterate it for emphasis, that there is a 6-year period that the FTA has to impose penalties from the date of violation, with a 12-month limited to where there is inaccurate information provided. But none of this applies if you conduct a fraud. The period of limitation goes away. And in any case, 6 years is a long time. But what that really means is that because the FTA also have 6 years to conduct the audit, that any business that submits an economic substance return in, let's say for 2019, which is submitted in 2020, it really needs to have its record management in place at least until 2025 for there to be, if the FTA makes an inquiry or conducts an audit, and if there's an appeal, then you kind of go forward and take the period of retention even longer. And really, for genuine businesses that do meet the test, it's the demonstrable evidence that is going to be critical in meeting the test and protecting yourself from any penalties. So this is my last slide before Q&A, and it's a very brief one. I think what we as advisors or what businesses should really do is clearly all the notifications that have been filed already need to be refiled, but importantly, refiled based on the amended law, which amends the definition of holding company, distribution service center businesses, connected person definition, licensees definition, exempted licensee criteria. All need to be looked at before refiling the notification. So it's not just all notifications have to be filed. It's only those licensees that conduct a relevant activity and are either exempted or non-exempt that have to refile the notification. All government entities which were previously exempted and filed for exemption now need to be prepared to conduct the full assessment of whether they are in scope, what activities are in scope, and prepared to meet the substance test, even for government entities. And last but not the least, I think now is the time for businesses to start looking at collating evidence on their substance test. What demonstrable evidence do they have that each of the tests are being met for 2019? But I think it's important that it's not only for 2019, for which the report will need to go in on 31st of December 2020. I think the businesses should now look at, because you can't change the past. You may have met the test or you may not have met the test, but at least you can put in place a framework on the ways of working going forward, such that on an annual basis, you are operating in a manner that is in compliance with the regulations. So I think this is a very critical step. It's the first year, and therefore significant attention should be put, in my opinion, on whether these tests are met and how do you demonstrate to the authorities that you meet the tests under the new rules. So with that, I wanted to conclude my session and really thank you for your patience, for listening to this at this hour, and I'll be happy to take any questions and perspectives or views from the members.
Yeah, the presentation part of your session is over, but we
Yes.
can see many people are eagerly waiting to ask the questions.
Before that, Mehtaji, I will run a
Yes.
short quiz.
Please do.
Yeah.
Let's test our knowledge.
Yeah. So Nilesh, can you please stop sharing the slide?
Sure.
Manoj, what is the prize for the best, the maximum scoring?
A big round of applause.
A big round of applause for.
First, I will require everyone to give reaction to Nilesh by clapping like Mr. Ananta Kumar has given just now. So either thumbs up.
You can on the screen. You can clap
on the screen or on the
Yes.
Zoom.
Thank you. That's very kind. Thank you. Appreciate it.
Manoj, go ahead with the poll question.
Yeah. So questions are very simple and easy. There are only 10 or 11 questions, and each questions will have around 30 seconds time. Very easy, because I got few complaints that at times I ask the tough questions. This time it's very easy. So here we go with the first question, which will have only 20 to 25 seconds, and it should not take even 10 seconds. So first question about 57 and 31.
57 replaces 31. Not able to come?
So Manoj, the way responses are coming in, it seems like yes, the question is really easy.
Yeah, this is the first one. I'm ending the poll, guys.
But we can't see the poll on the screen. I'm not
No.
able to.
No, host can't see that.
Oh my God.
Yeah.
So Anish Mehta sir, for you it's a different quiz. You
So
guess what is
I'm-
the right answer.
Now you want me to see share the result. So yes, here is the result. 87% people are right. Members are correctly replied. 57 of 2020 is replacing 31 of 2019 because it's mentioned 57 of 2020 effective retrospectively. Okay.
You know,
So
5
the
plus
next-
7 is 10. And I think it's a decision number 100 also. So that also
Yeah.
comes to 10.
Wow.
Great. Next one is little easy. Take your time. Again, 30 seconds. It should not take that much time. Sole proprietor, establishment company, shareholder in China business. Okay, I'll keep quiet.
Roughly 50 people have answered till now.
Yeah, 50%.
Wow.
Nilesh, you can see the window of questions or no?
Yes, I can see that.
Great. So I've ended the poll. Now here is the result. Nilesh, if you can share your thoughts on this question.
Divided opinion.
Yeah.
So is the UAE national or ABC carrying out? So UAE national is certainly not carrying out a relevant activity because it's not a licensee. Individuals are not. If ABC is considered as a sole proprietor, a sole proprietor is again outside the scope of the licensee category. So ABC establishment, assuming it's a sole proprietor as is indicated, should also not be in scope and should not be regarded as carrying out a irrelevant activity.
Yeah, great. Thank you. Moving to third one. It's related to the period. There is a question on that. Now I have closed the poll. Financial year from 1st July 2019 to 30th June 2020. Here, just read the question carefully, little bit carefully. What would be the first assessable period for ESR?
I love this part. This is the question which I can say this belongs to Manoj. I mean, Manoj has that tricky part of it putting in the question. यहाँ पे वो question दिख रहा है.
So again, guys, 5 more seconds. Read the question carefully. Little bit only.
First accessible period he's asking, huh?
Mr.
Yes.
Ramanathan is reading the books.
Okay. I am ending the
Open
poll
exam there. He's giving
and
open
sharing
exam.
the result. Now the question says assessable period. It doesn't talk about the notification or report. So for a financial year ending on 30th of June 2020, assessable period is also the same. 1st July 2019 till 30th of June 2020. Right, Nilesh?
That's correct.
Okay, great. Thank you. You confirm my answer. Authority. It's very simple. It should not take more than 5 to 10 seconds.
FTA.
And this should get, I mean, good votes.
Oh, still equally.
Oh.
Guys, read the question carefully.
Yeah.
It's very simple. Jay, don't blame me for this. Huh?
I know. I can understand. I mean, results which is coming in is really shocking for me as well.
Yeah. Mansi madam, padhiye aap highlight pe ho. Just take anything. It's anonymous. Okay, 35 seconds. So now here is the result. Anybody can type the answer in the chat window. That regulatory authorities has no relevance after FTA being authority, assessing authority. So false. Yes, that is the correct answer. After the appointment of FTA as National Assessing Authority, regulatory authorities are still relevant because they are the relevant authority for their jurisdictions. Okay, next one related to the branch. Very simple one. Not my kind of question, but still I have asked. Nilesh, this is for you. मानसी मैडम सीरियसली पढ़ रही हो आप? टिक भी तो करो.
संजय साहब ने हाथ ऊपर कर दिया.
Okay, here we go with the result. Over to you, Nilesh.
No, this is correct. It is subjective because we need to see whether the UAE branch is the relevant, whether the income of the UAE branch is subject to tax in the location of the foreign parent. So subjective depends on conditions is correct. If it is subject to tax, then it's exempt. If the income is not subject to tax in the hands of the foreign parent, then it's a separate licensee and needs to report.
Right. Thank you, Nilesh. Moving to another one. Question is simple, but read the answers. So here we go. Read the answers, options carefully. There is ample time, so no worries. Activities listed in commercial license determines whether a licensee undertakes a relevant activity. Oh, 1% also voted. Good question, but not sure about the answer. 4% is still saying safe to file the notification. Here we stop. Okay. Sharing the result. Do the activities listed on the commercial license determines whether a licensee undertakes a relevant activity? No. In this new law, it simply says a substance over form approach, which we are justifying from the day one of ESR. Substance over form over the relevant activities, over the activities on the licensee. So here we go with the next one. Income from relevant activities.
File Rajiv.
Prashant साहब.
Pressure, man. For XCOM, you need to reply because I will keep a track that who replied correctly.
Else you don't get CP.
Yeah.
Pressure is only on the dispute of one question. So
No. Only problem is XCOM cannot reply because they will not. They are co-hosts, so they cannot reply back.
Rajiv, you can raise your hands. We will take your query.
I will bring it up that.
Yeah. Okay, guys. Here we stop this.
Mr. Avamurthy, don't play with chair.
Over to you, Nilesh. Nilesh, over to you.
Yeah, so now the answer is correct. I think if you conduct a relevant activity but do not earn any income, then you certainly have an obligation to notify, but not to report.
Yeah.
So the answer is correct. The majority answers.
Thank you. Penalties. It's quite difficult question. So read it carefully. Ah, shabash. 100% answer correct.
इसमें कुछ डिस्काउंट है मनोज साहब?
Yes, sir. Last fourth option is the discounted one. That is applicable on the few people. Whoever are ready, always ready to reach authorities. For this, go to authority. For that, go to authority. Write memos to authority. So here we go. Answers are pouring in. Yes, so we'll stop. Now, Nilesh has covered this specifically. I'll share the result. Here are the results. Nilesh has specifically covered that penalty has been changed to how much? 20,000.
I can see that the majority answer is that the amount is 20,000. I have a slightly different view. The amount is actually 0.
Correct.
Manoj, you want me to explain why?
Yeah, it's okay. You can continue, please.
I think it's a very good question. So the due date of 30th of June was only for licensees with a financial year end of 31st of December 2019.
Correct.
If your year end is 31st March 2020, you have 6 months from 2020, which is the end of September, but now they're not accepting notifications, and you will need to file it only on the portal. So certainly if you didn't file by 30th of June, even if you were asked to by the authorities, no penalty should apply in this example.
It was explained in the FAQ as well on our website.
Yes.
I've taken this question from there on. 9. Related activities. Guy, for your comfort, I have given last option also. Let's get speakers' views. So feel free to opt that.
Angajan Saab,
Let him concentrate.
Five more seconds.
I like the last option. Let's get speakers view.
Ending poll, sharing result. Over to you, Nilesh.
I think getting speakers view out of is always an option. But yeah, I think the answer is right. I think the ESR applies. I think the question really is it a IP or is it a high risk IP? If you develop the brand, under the old regulations, if you didn't carry out R&D or did not maintain, manage the brand, you would be a high risk IP. But now certainly you would be an IP business that has failed the ESR tests. So CSR certainly applies, is the short answer. But what category is the one that's it's an IP business that will have failed the tests.
Correct. Thank you, Nilesh bhai. Second last question of the evening from my side. Here we go.
आपने members का question भी पूछ लिया sir.
Only few ones, sir. This also is an option over to speaker.
हाँ तो directly इसके over to speaker ही जाएगा sir.
Yeah, and I'm sure it's only speaker can reply correctly and confidently.
Again, this is a
5 more seconds to go. And it's coming in. Okay. Ending poll, sharing result. Over to you, Nilesh.
So in this, it's a combination of 2 and 3 is the right answer. So certainly the test has to be met for each relevant activity. However, duplicate reporting is permitted. When we say duplicate reporting, we mean by you can avoid duplicate reporting by combining it in certain cases. So not in all cases can you, if you're carrying on 2 activities, can you combine them. It's only if you are, if you're in the distribution service center business and carry on headquarters as normal part or vice versa, or if you're in a lease finance business but provide services to group companies, then you would not be considered as a lease finance, considered as also carrying on a service business. If you're a captive insurance, that's the example the guide uses. If you're a captive insurance that provides services to group companies and on a captive insurance model basis, then you're an insurance business but not a service business, because that's the predominant activity. So the test needs to be met for each relevant activity. However, duplicate reporting is permissible in certain cases, is what the answer should be.
Thank you, Nilesh. Last question from my side. I have already mentioned it, bit tough. You see the heading. So read the question again. A bit tough question.
So, do you think it will be a split answer, 40, 45, 40, 45 split, or you think?
No, it will be 100% for first one, without reading the answer, without reading the question again.
Manoj, you played all the poll. I projected everyone, whoever has opened their videos.
Great. Thank you, Chairman sir.
I request more people to open their videos to keep myself busy.
Okay, guys. 5 more seconds to go. Separately, one consolidated. This was a tricky question. I have also asked this question during one of the session during daytime. I already informed Nilesh that speaker has very coolly skipped that question. So I'm ending the poll. Nilesh, your loved question here. Over to you.
It's I'm very pleased with the answer. At least it gives me comfort that people were listening to my presentation.
Yes.
Because I did cover this specifically, so that's the right answer.
Okay, so
it's you can do one consolidated notification filing in this case.
okay, thank you, Nilesh. So now I have closed the poll. Now over to you. We will take questions one after another. First, raise hands by Darshan Gadia. Darshan, unmute yourself.
Yeah, hello, sir.
थोड़ा नीचे करो, थोड़ा नीचे करो, थोड़ा नीचे
Yes,
करो.
sir. Straight to the question,
हाँ,
please.
ये बात.
Yeah,
No
hello.
more thank you.
Yeah.
No more thank you, and just stick on the question, please.
Yeah.
Hello.
हाँ,
Yes, Darshan.
चलो,
Sir, we
चलो,
can
चलो.
hear you.
Yeah, yeah.
Please.
Okay. Thank you, Nilesh ji. Very nice session and very informative. My question is regarding lease and finance business. We have entered into one single, we have entered into one single transactions of advances to our related parties, and later on in 2018, and later on we have settled those advances against the lease, finance lease. So whether it is covered under lease and finance business or not, this one is the only single transactions.
Sorry, could you repeat what exactly happened in 2019?
In 2020, we have entered into a lease finance business, finance lease. We have entered into a finance lease with our related party.
Okay.
Yeah. So whether it is covered under lease and finance business activity?
Yeah. So I think the lease finance business is defined as one which is regulated as a lease finance business. If you enter into financial leasing, where ultimately the ownership will pass to the beneficiary, that is included as a lease finance business under the regulations.
Okay. So it will cover, right? But it will
Yes.
cover in next year. Is it? Yeah. Okay.
Sorry, yeah, you're
Thank
right.
you,
If the activity was conducted in 2020, then you will need to report this in 2020, for which the return is due in 2021.
Okay, so we are not required to file
Just one
notification
question,
in this
please.
year also, right?
Darshan, just
Not for
limit
2019.
yourself to one question, please. I mean, I request all the questions. Please keep the question concise so that we can revert back quickly. We have other people as well.
Sure.
Yeah, better.
Okay,
Next is Bhatia ji. You have unmuted.
Yeah, hi. So I wanted to ask regarding branch office of an foreign company which is based in UAE, but it is a rep office, so it doesn't generate any income. It just market the products of the parent company. Now, so will the marketing of products of the parent company will be treated as being providing service to the parent company, and will then be considered as a relevant activity?
Yeah. So I think Viren, you answered the question as part of your question already.
Okay.
As you said, rep office does not does not earn any income because it's carrying out pure marketing. It doesn't charge a fee. And therefore, on the basis that if it doesn't carry on a commercial activity and earn any income, then it's not in scope. In this case, it would be outside the scope as not conducting a relevant activity. It certainly doesn't earn income, and it doesn't conduct a relevant activity because it's doing it for the foreign parent.
Okay, so then even the notification is not required, or is the notification required?
I would think in this case, a notification should also not be required.
Oh, okay, fine. Thank you so much.
Raja sir, I've unmuted you. Please.
Yes, sir. Hello, sir. A foreign company is having 3 different branches in 3 different Emirates called Sharjah, Dubai, and Abu Dhabi.
Now here my question come, in which single branch will consolidate the notification, or we need to file a 3 different notification for 3 different branch because parent company reside in foreign.
I think it's a very good question. Thank you for that. I think this example is not covered in the regulations, and therefore in this case each branch would be treated as carrying on a separate legal. It's be treated as a separate legal person because the parent is outside, and unless we get clarification to the contrary in times to come, you should be filing 3 notifications.
Okay, thank you, sir.
Manu,
So-
go ahead.
Branch of foreign
I,
company has to
uh,
separately file it.
Yeah, Manoj, is
But-
it clear? The
Clear, but
voice is
how
Yes,
come
yes,
there is
yes.
something a question for you?
Okay, quickly, Manu.
Yeah, Nileshji, very one point. Even in the previous discussions, we were taking one stand and different opinion also was coming. In the distribution and service center business, 2 sentences are removed. That is importing and storing into UAE and reselling outside the UAE. Okay, so if you are reselling within UAE, anyway, the law is applicable. So that stand we have taken earlier also. Now,
Yes.
if we are not reselling, the word used is reselling. If we are not reselling, but it is going for manufacturing activity. So we had taken a stand earlier also that it will not come under regulation. So what's your view related to that?
I would agree. I don't think the position changes there. So if you import either for the purpose of local consumption, or if you import raw material, which is then processed into a finished goods and then you sell the finished goods, then that import of raw material from a related party also, in my view, should be outside the scope and not regarded as a distribution.
Okay, thank you, thank you, thank you.
Great. Nasir साहब,
जी सर,
एक ही क्वेश्चन है आज.
Yes, sir. Straight to the question, please.
Okay. My question is on the wholly owned entity owned by UAE resident. So here the ESR it comes under exempted category, but what kind of evidence one can give? For example, under this category, exempted categories, maybe 90% of the entities fall under this category. For example, if I have interpreted correctly, even the small shops, salons, everybody will fall under this category. So do all of them have to file, basically take exemption, and what kind of evidence they can provide that they don't fall under ESR category?
So the first thing we need to look at before we go into the exemption, let's determine whether or not they're conducting a relevant activity. If the answer to that is no, and as I said, there are 9 categories of relevant activities with definitions. If the answer to that is no, you don't need to look into the exemption and what documentation you need to submit. Assuming you are conducting one of the 9 relevant activities, and then which means you are in scope, and then you file the exemption. In this case, I would say a group structure, a chart showing the ownership of the UAE company or the UAE business by a UAE resident. If the UAE resident is a UAE national, then of course the national ID card of the UAE national. If it's a UAE resident, then you need to provide evidence of your residency permit, as well as evidence that you reside in the UAE. So, lease agreement, etc., that shows that you are living in the UAE is also something that you will need to include. If you are claiming exemption as a sole proprietor, then the establishment of the entity as a sole proprietorship, the legal documents should be included in the exemption. But the other bit to look at is also that you need to have proof that you don't have an entity outside the UAE also. So that also needs to be confirmed through a group structure chart and a confirmation that you do not have an entity that's consolidated for financial reporting purposes. So financial statements, national ID card, residency visa, all of those would be evidence that would need to be included.
That means all the entities, once they have to submit and prove that they are not carrying relevant activity, or they don't fall under ESR?
It's not once, it's annually.
That
So
means
every
all the
year.
licenses registered in UAE without
No,
any.
so each year, every licensee, which is either a commercial and an entity with separate legal personality or an unincorporated partnership, each year, each entity, forget the trade license for a moment. For a moment, ignore the trade license. Focus on the entity. You may have one entity that might have multiple trade licenses. Don't go trade license wise. Look at the entity. What is it that the entity does? On a substance over form approach, actual commercial activity, what is it that the entity is doing? If that entity's actual activity is a relevant activity, it's in scope. And you need to revisit and perform this exercise each year. You may be no longer be carrying on the same relevant activity in year 2, or you may be carrying on a different type of relevant activity or an additional relevant activity in year 2. So you need to do the classification and the analysis year on year.
Okay. Dilesh, before we move to Sanjay sir, I have a common query actually. Let's say a trading company who has different subsidiaries across the globe, and they are cash-rich companies. They're just providing financial support to other group companies. At times they charge interest, at times they don't charge interest. So as per lease finance business, they qualify for a relevant activity of lease finance. So they will notify. Now when it comes to the SIGA, practically speaking, there is no resources are required, no assets are required. It's a simple thing. A subsidiary company can place a request that we need fund. They will just transfer the funds. Whenever subsidiary has the fund back, they will refund back that money. So they failed the SIGA test.
Well, I would not say that they failed the SIGA test. I think you need to understand what's the volume of these intercompany loans that are moving, volume and value. And relative to the volume, is it happening on a daily basis? Is this a cash pooling arrangement where there are daily transfer of balances, surplus balances and deficit balances? Does it happen monthly? Does it happen half yearly, or does it happen yearly? Once you've determined what the scale of the activity, now you need to determine how many people do I need to conduct that activity. Is it one person who needs to do it once a year? Or is it a team that needs to look at the cash flow position of the subsidiaries, understand who's got a genuine need, where there is cash, liaise with the bankers if required. And I think it's a relative to that activity and the scale of that activity, you need to determine how many people you need and what is it that those people need to do to manage this function.
Okay,
if you've
so
got a cash pooling structure, treasury structure, which is common in Dubai, with significant movement of cash balances, both physical and notional cash balances on a regular basis, you probably need a more sophisticated treasury function that performs these activities.
The question is actually here, let's say, though it's required on weekly basis or monthly basis, and there is no as such treasury function, it's one man task, because when it's a cash pooling, excess funds being transferred to the head office account. If they need fund, they'll place a request and that guy will transfer the fund back to them. Now the concerns here from the common parlance that what about the SIGA test? Because it says it adequately, sufficiently managed, assets should be there, manpower should be there, and everything should be there. A company with 500 visas, they have hardly one guy of treasury. He's just managing those things.
See, I think there's no right or wrong answer on this one, unfortunately, because it
No,
all
about
depends.
the SIGA. Sorry to interrupt you. About the SIGA.
Yeah, so let's look at what
or
the
SIGA plus a test. SIGA plus ESR test.
Yeah, so ESR test says, so let's look at the SIGA. Let's look at the SIGA first. For treasury function, SIGA needs to, lease finance function, SIGA needs to say that you're agreeing the funding terms, looking at the tenure of the loans, and so on and so forth. And it also clarifies that the SIGA is not an exhaustive list and is not a prescriptive list. So you don't need to tick all the boxes.
Right.
You can take either one of those. You could take an alternative box that explains the activity.
Correct.
I would say, and obviously without looking at the facts in more detail, to the extent there is someone sitting in the UAE who assesses, accepts, records, consults on which subsidiary around the world needs cash, who does it need to give to, Where is the need genuine? Are there any approvals required before processing that cash movement from country A to country B? Are there any tax or other regulatory or accounting considerations that need to be taken into account? If there's someone who's doing that in the UAE, that in my view is SIGA being performed. If the scale is such that you need 2 people to do it, 5 people to do it, or 10 people to do it, it's relevant to the business. How doesn't a similar business in the industry, in the same industry, do that on a genuine basis? And how many people do they need? It may be that there's 500 million worth of funds moving cross border, but it's in 3 transactions. You don't need too many people. But if that's 500 million is based on 50,000 transactions, then surely one person is not enough to do that. Then you need more people. If you need more people, we know visas and office space is linked to that. So then you need more of an office space, and that's adequate from that perspective. So it's a slightly subjective criteria. I think you need to look at and you look at the mirror and hold yourself accountable. Say, can one person do this job?
Correct. So it's economic substance, like on real terms, it's a substance over form itself.
Yes, absolutely.
Businesses has to justify the requirement of adequacy test and asset test, classification test, and everything.
And if you see, absolutely, and if you see the report that will come, and it actually is there in the regulations already, that as part of the report, businesses need to give a self-declaration that they meet the 3 tests. So the onus is on the business to prove the adequacy and the other tests. And the guidance clearly says that they cannot give guidance on adequacy because it's a very subjective topic.
Correct.
And that the FTA will take a strict but pragmatic approach to assessing the substance. So one would hope for a open and a genuine conversation with the FTA around demonstrating substance relevant to the business activity carried on and relative to similar business activity carried on in the industry in which the client or the business is operating.
Correct. Thank you. Sanjay sir, please go ahead.
I have one connecting thing.
Please.
Sanjay, just give me half a minute, not more than that. So just one clarification which came up on a natural person versus a judicial person owned by a single entity, single individual, a sole proprietorship we are talking about. I think I have a little bit of disconnect on this, because if you read the exemption, what the line says is the licensee that is wholly owned by one or more residents in the state and meet the following both 2 conditions is not part of MNE and it carries business only in UAE. So I think we need to look at the sole proprietorship in a different way than the natural person. So which is part of the previous question which came up. So Nilesh, maybe your views will help to connect the dots on this.
So if I'm reading the regulation, it says you're right, a licensee that is wholly owned. So assuming licensee, it says licensee. So first you need to be a licensee.
Correct.
Okay. Before you go to an exempted category, you're presuming you're a licensee.
Perfect. I'm a sole proprietor.
But if you're a sole proprietor, you're not a licensee.
I am a licensee. I have an establishment. I'm in RAC-free zone or a Jabza-free zone.
If you look at let's look at the definition of a licensee then before we go to an exempted license.
Perfect.
It says it's a juridical person, incorporated inside or outside, or unincorporated partner. You're saying it's a juridical person.
I'm a juridical person.
But the FAQs have expressly excluded sole proprietor.
I agree your point. That's the reason I'm saying the law is having little dispute on FAQ. I am agreeing to your point, what you're referring to.
Yeah.
Because I would say I'm a judicial person. I am a free zone. Why I'm asking this question, because this will impact a larger population where in the free zone people establish a sole proprietorship and a lot of profit shiftings are happening.
Yeah.
So we should not go into the wrong direction, because the efficacy of FATF and other things we see, it's not a verbatim I am not getting into. I'm getting into the content.
No, I think you're absolutely right. I think it is. So the FAQ, again, we're clear, FAQ is not the law. The law is the law, which says, and as per the law, I would agree with you, sole proprietorships, which have and FZEs, which have separate legal personalities, foundations which also have separate legal personalities, are licensees.
Correct.
But I'm drawing reference on the fact that the FAQ, which the Ministry of Finance has issued, and it's not by any other authority, and it seeks to clarify that, and there's specific over generic provisions or specific over generic rules. There is helpful guidance or explicit guidance to take the position that sole proprietors and foundations should be excluded from the definition.
But Rajiv is talking of free zones. I don't think so. Free zones have sole proprietorship. I don't know. I have not seen.
FZD, enterprises, FZD.
Yeah, but that is a company.
I agree. So that's what my view is. If a
that is not a sole proprietorship. It's a single shareholder, correct, but it's not a sole proprietorship.
That's right. That's
see,
right.
you can see, we can talk, Anish, like example, we as a consultant also can set up a sole proprietorship.
FZD.
Example, I am a sole proprietor.
It has a share capital. It's a shareholder.
No,
FZD also have share capital.
Perfect. Mainland companies are sole proprietorship companies.
Mainland companies, yes, you have sole proprietorship.
I'm saying there also, it's an establishment. Whatever I have done, I have taken a license. Anyway, my view, I've just shared that. So my thought,
Rajiv, in mainland establishment, they don't mention 100% shareholding. They just mention establishment company.
Correct.
Only
so
owner will be there. Owner will be there.
So FZDs are different than the establishment in mainland.
Yeah.
So my reference is a sole proprietorship also gets covered under license because it's an establishment or a judicial entity, and hence we need to test the law whether we are part of MNE or we do business only in UAE. So that's the only point I want to mention.
Yeah, so it goes with substance over form. Government says, law says sole establishment means individual owned business.
Yeah.
In mainland, as soon as you
I think let's take the other questions.
Yeah.
We can debate on this later on.
Sanjay sir, please go ahead.
Can we just allow other people to ask a question,
yeah,
so that they can get their answers? Now the 6 hands raised,
yeah,
so we can quickly ask all the people.
Yeah, okay, I'll keep it short. Hi Nilesh. So there is an entity here in the UAE which is running a headquarter business. That was the whole purpose of that entity. Even the license says so. And the team of people sitting here is responsible for the profitability of the geo region and common HR, finance, everything is there. So there's no doubt about that. However, just because it's here in the UAE, the parent companies are actually using this also as a vehicle to store goods, because it's in the port here, they can manage to store goods. So they store goods under that entity, and as and when any other entity requires in the jurisdiction outside the UAE, they actually ship it out. So obviously for buying and selling, they are involved, right? But they're not making any profit. So these goods stay with them and then they just ship them out. How does that impact headquarters business? Sorry?
So it doesn't impact, it doesn't change the classification of headquarter. Because they're saying the core function is of a headquarter function. It's not part of, it's not a normal part of the HQ function that they're storing goods. It's because there's surplus capacity or there's spare capacity, there are people here. So it's not, so HQ function in this example, in my view, stands as it is. As far as whether this would be regarded as a so the question is whether it would be regarded as a distribution business. I think when you say it stores it when it has capacity and ships it, I think we need to see from a legal and contraction perspective, is it buying it in its name and selling it? And is that buy-sell transaction recorded in its books of accounts? Or is it merely providing surplus capacity for storage, whereas the import, clearance, and the shipment for customs purposes is handled by a 3PL? So I think if it doesn't matter if it's profit or loss, it doesn't matter if it does it on a cost-to-cost basis, as we've just talked about.
But if it imports under its own name and stores it?
If it imports under its own name, which means it has recorded a purchase in the books of accounts, and it then records a sale in the subsequent case. It doesn't matter if it's on cost-to-cost, it's a it would be a distribution business.
Yeah, I mean, they don't record it right now. So that's where the confusion is. They've never recorded those transactions.
So yeah, I mean, the thing then is it recorded or is it required to be recorded? If it had prepared accounts, is also something that we need to look at.
Agency versus principal.
Raghav, please go ahead.
Hello, sir. I just want to ask a question. Like we have clients coming up which were not there in UAE and which have their financial year end of 31st December 2019. So some of the portals like authorities are asking for the ESR filing. So do we need to file right now for the old provision and then again wait for the MF, or no filing is required for the previous year as of now? I'm asking for those who have not filed yet.
I think those that have not filed,
Yes.
so those that have not filed, I think those that have not filed have actually originally missed the deadline. So
Exactly.
they are, I think they're already, exposed themselves as being subject to penalty. Whether it'll be actually levied or no, we don't know, because the penalty is, that they had filed it under the old law.
So
but technically they're subject to penalty. If they haven't filed today, I don't think any regulatory authorities will be accepting notifications on email or on Excel. I think they're guiding all regulatory authorities to not accept it and for the filing to be done on the portal.
So if filing is required to be done now, so it will be directly on the MOF portal, right?
That's right. Yeah.
On a safer side, keep a provision in the books. Next question. Abdul.
Yeah, hi Nilesh. My question is on the lease finance business. I know that when we give or the company has given a loan to, let's say, foreign subsidiary, interest-free loan. Interest-free loan is of course not a relevant activity. I know that, but now under IFRS 9, when we apply, you'll end up valuing under the fair value, and you create value, fair value, and you will end up interest income on your financial income disclosure because of the IFRS requirement. So now how the authority will look at it this, because principally you have landed at zero interest, but because of the IFRS requirement, you'll end up showing something in the financials.
I think this is a good question. I think on the basis that from an accounting standpoint, and again, if I look at what is relevant income and the definition we were looking at, relevant income does mean gross income recorded in the books of accounts as per financial statements and as per accounting standards. And applying that specific reference now, I would say the IFRS related interest provision could bring this in scope of a lease finance business, even though on a commercial basis and the agreements are all on an interest-free basis.
Just one more question. So if you don't, if guys, you allow me. So if it is a same loan given to the shareholder, still applicable, because shareholder are individuals and not, part of a group.
So it says it's given to an individual.
Yeah.
Yes.
Shareholder. Is it given to an individual shareholder?
Yeah.
Company law will not allow to do that.
Just trying to look at the FAQs. I would say the reference is only to loan given to a UAE or a foreign group company. I would say loans given to individual shareholders should be out of scope, the way I look at it. It's only intercompany loan given to a related or an unrelated company, whether in UAE or outside UAE, that is in scope.
Salah,
go
ahead.
My question related to foreign connected person entity. So, for example, in order to qualify companies as foreign connected entity, all such companies' balance sheet has to be consolidated at one company, correct?
So in order to be a foreign connected person,
all such companies' balance sheet has to be consolidated at one point. For example,
consolidated or required to be consolidated. Yes.
Exactly. For example, if company A and B, A is in UAE and B is in not in UAE, and A is fully owned by company C, whereas B is partially owned by company C. So that means A is consolidated with C, whereas B is not consolidated with C. So that means if A is providing any service to B, it will not come under foreign connected person.
So you're saying B is not consolidated?
Exactly.
Okay.
For example,
So if it's B
A
is not
fully owned
consolidated,
by,
if B is not
A is fully
consolidated,
owned
it should
by
not
B.
be included.
Yes. So unlike previous clause wherein it has to be common control, now it has to be consolidated. Balance sheet has to be consolidated. Is it like that?
No, so sorry, I think you need to look at whether there is a requirement to prepare consolidated financial statements. But in your case, whether B would be required to be included in the consolidated financial statements, not whether it actually is or not. So I think you need to look at the local legal requirement on consolidation. And if the local legal requirement on consolidation is that B ought to have been consolidated, but in practice it may not be, then B in that case will be in scope.
But if someone has investment in B, B is not required to prepare consolidated. It's the person who has invested in B is required to prepare consolidated.
Yes, so but if A is providing a service to B, B has to be consolidated with A or required to be consolidated with A.
That anyways you have to do, whether it's a partial control or whatever.
Correct.
If it's an associate jointly controlled or anything, it has to become in the consolidated financial statements.
Jain sir, go ahead.
Yeah, my question is something related to personal needs. If I take up a role on the advisory board of a fintech startup in the Silicon Valley, would I be treated as an unincorporated partnership? It's in my personal capacity.
Sorry, could you repeat that? If you're in,
if I take up a role on the advisory board of a fintech startup in the Silicon Valley in the US.
In your personal capacity?
In my personal capacity. Would I be an unincorporated partnership in that sense in the definition of licensee?
Not an unincorporated partnership. You're an individual or natural person. You would be outside scope.
Outside the scope. All right.
Yeah. So just coming back on lease finance, I see some of the comments. I would actually tend to agree. I think the example on and in the FAQ on lease finance for intercompany is on UAE and foreign. I would tend to agree. I think if you've got loans provided to a foreign shareholder, I think there was an example question that someone previously raised, who is a natural person, and if that's interest bearing, I would agree that would fall in the scope of lease finance.
Okay, thank you, Nilesh. Akhil sir.
Yeah, good evening. My question is on again the sole proprietorship. Like I am not much clear on this. Like if a company
Sorry. एक जगह रुक के पूछो, walk करते नहीं.
Sorry, can you hear me?
Yes, you're audible. Please go ahead.
Yeah, I'm asking, a sole proprietor can be anywhere, right? It can be in free zone also, it can be mainland also.
That's right.
It can be single shareholder company. Like I think Mr. Hiras told some time back that a REC free zone company can have a single shareholder company, it can be FZE. But it can be treated as sole proprietorship or no?
I think we had some debate on this. I think if you've got a free zone establishment, which is a single shareholder company, but that free zone establishment as a single shareholder company has separate legal personality, which I think it does, then that I don't think will be a sole proprietor. Sole proprietor, I think that there would be legal meaning of what is a sole proprietor under UAE law, which I think does not require there to be capital or a separate legal personality. It's linked to the individual, and therefore is different from a free zone establishment.
So if it's share capital, it means it will lose the status of sole proprietorship. Like it can be 100% owned share capital.
Obviously,
business.
there will be capital that the individual would put in the proprietorship, in the sole proprietorship. But I think we need to look at the legal form of sole proprietorships under UAE law. But a free zone establishment, I think, has a separate legal personality and would be a licensee, would not fall in that exemption of sole proprietorship.
I think in the sole proprietorship, liability is unlimited, whereas in the FZE, it's limited by shares.
Yeah.
Anish, but here we are not talking about the liability story. Here we're talking about a profit.
No,
profit means
profit shifting
legal
is happening.
status. I'm talking on legal status.
Correct. I'm saying from an establishment or sole proprietor perspective, my view still it gets covered as a licensee. But anyway, we'll look at more details from the regulators.
Yeah. In interest of time, let's go to Sanjay ji. Sanjay ji, please go ahead with your question.
Last two questions and when we close.
Okay. So Sanjay ji, second last question. Please go ahead.
Yeah, see the cash pooling arrangement between the intercompany, but that is without interest. So will it be out of the scope of related activity?
If it's interest free,
Yeah.
then it should be outside scope, not regarded as a relevant.
So most of the companies in UAE are transferring the cash, but they are not charging any interest for that.
Outside
so that could be out of scope. But if
Yes.
they are charging the management fees for the service provided, so that will not be the foreign connected person because it is locally done. Between all the companies are based in UAE.
So if a fee is charged to the management fee is charged by one UAE company to another UAE company, that by itself is not a relevant activity.
Yeah, right. So both the way it will be out of scope. That fees will not be considered as an interest for the loan or fund used by the other company.
No, sorry. So if there's cash pooling without interest, it's not a relevant activity. If you charge a management fee for handling the cash pooling arrangement, and if those management fees are charged by one UAE company to another UAE company, then again, it's not a irrelevant activity.
So it should not be seen from the substance over the form that they are charging for this loan purpose.
But there's no perceived tax avoidance. In UAE, there's no tax, but there's no tax avoidance in another jurisdiction. There is no base erosion, profit shifting.
Basic purpose wise, it is not anything which is related to scope of activity. But since it is a lease finance activities, okay, and with interest also within the UAE company, it will be considered as a related activity. I don't know why the purpose of erosion of the profit is coming.
Yeah, I agree. I would agree with you. I think if you have an interest-bearing loan provided to a UAE company, that's a relevant activity, which seems, it seems an anomaly, but that is certainly the case. I would agree but that's explicitly provided for in the FAQs.
Yeah.
But I agree, it doesn't appear to make full sense from a base erosion perspective, which is what they're trying to avoid.
Very nice presentation. Really enjoyed it. Thank you.
Mahesh, can you go ahead? Can you please go ahead on the question?
Yes. There is a company in UAE which deals with two different companies, one let's say from Japan and another is in US. And UAE company is not aware that these two are related companies. So UAE company is not connected with any of these companies, neither Japanese nor American.
That's fine. If the UAE company is not connected to the Japanese or American companies, the services from a UAE company's perspective are provided to a third party.
Okay, and both these companies are related, so they might be doing, some profit shifting.
So that would be the obligation of tax authorities in those countries to have laws implemented on that Japanese and American companies. I don't think it's the UAE company's obligation to find out whether those companies are related.
Correct. Thank you.
One thing, you should not be acting as a conduit here.
Yes, of course. Yeah, that's a good point.
Thank you. Thank you everyone for attending today's session. Thank you really. I really appreciate your participation in today's event, and a special thanks to Senior Shachur for such an insightful event with a lot of details, a lot of discussions, a lot of deliberations, and patiently answering all the questions with so insightful details. Really appreciate that, Senior. And
we have
at ICA Dubai chapter, we really thank you for your accepting our invite and enlightening our members. So the certificate of appreciation from the ICA Dubai chapter is for you. So can we have a round of applause? All the members can put together in form of emotions. So round of applause for CA Nilesh, and you can say thanks in the chat box as well. Now,
thank you very much.
Now to conclude our session, I would like to ask our Treasurer C. Harikishan Rankawat to do the formal vote of thanks.
Hi, good evening, friends. First of all, I would like to thank our EXCOM member, CA Manoj Agarwal, for bringing our today's speaker, CA Nilesh, and arranging ESR poll as well. Also, I thank to our chairman, CA Nis Mehta, and EXCOM for supporting this initiative. Now, I would like to thank our today's energetic speaker, CA Nilesh Asar, for sharing his expert views on recent ESR updates and answering all the questions for our participants Actually, we are already delayed, I think, by 1 hour, but still is continuing. Thank you very much, sir. And I also thank Ms. Amna and Mr. Akram on behalf of the ICI Dubai chapter for joining this webinar. And we are looking forward to jointly organize the professional events going forward. Now it's a time to thank our sponsors as well. I thank our principal sponsors, Danube, Tally, Malabar Gold and Diamonds, Lulu, Shura, our platinum sponsors, Criff, Dun & Bradstreet, AGMC, Creston Menon, MMGS Consultants, IFCO, Al-Ribabi, Gulf Islamic Investments, Clyde & Co Law Firm. And I also thank our banking partner, Bank of Baroda, institutional partner, Delhi Private School, and media partner, Khaleej Times. At the end, I thank each one of you for joining this webinar. Thank you very much. Good night. Thank you.
So thank you, Treasurer sir, for a nice vote of thanks. I would encourage all our members, whoever attending this, please do use the services of our sponsors because they are valuably supporting our institution here in Dubai. So definitely they are one of our family and they are big support to our chapter in good and difficult times as well. They stand by us. I'll encourage all our members to definitely try our sponsors services wherever the possible. And whatever context, definitely do reach out to them. And in case you need any assistance in terms of reaching out to any of them, please do contact us and we'll definitely get you connected to our sponsors for the respective services in accounting, audit, tax, legal, education, or shopping, or any other things that you probably need. We are there to guide you to connect with them. Thank you very much for attending today's session. We look forward to more sessions in due course, especially the 25th one. More details to follow in relation to that event because it's something very unique that we thought about our members and their families, that it is going to bring some excitement and some very, very amused, I must say that amused, entertaining experience for everyone. So it's going to be something very extraordinary. Looking forward to it and looking forward to welcome you all again on the event in due course. Till then, good night to everyone from
Thank
the
you.
ICI.
Thank you.
Thank you.
Everybody.
See you. Bye.
Thank you very much.
Thank you.
Thank you, Nilesh bhai.
everyone.
Thank you very much.
Thank you.
Bye.
Thank you,
very much,
everyone.
everyone.
Thank you so much.
Thank you.
Same.
Thank you, Nilesh bhai.
Everyone.
Thank you once again.
Thank you.
Thanks, Nilesh.
Thank you, everyone. Thank you. Bye. Good night.
Nilesh,
Thank you so
appreciate your
much,
time
Mr.
and efforts.
Nilesh.
Thank you, Nilesh.
It's a great listening to your voice and
Okay.
Okay, Anish, thank you.
Good night.
Thank you, everyone.
Thank you, Nilesh.
Thank you,
Thank
sir.
you.
Thank you.
I
Thank you all
think
the
you can have a
participants.
wonderful evening
You can
ahead.
unmute yourself.
It's a great time, and I think, like, the great patient that you heard all the things. So it's something very interesting to see our members' patience and the interest in the topic. Love for learning continues in a year of members. So that's what we are committed to, and that's what we are trying to bring to all of you.
Hello.
Balaji, how are you?
आ रही है. Okay, sir. Thank you. Thank you, Mehta ji.
Thank you. Bye. Good night.
Yes,
Thank you.
sir.
Bye. Bye. Bye.
Thanks,
Good night.
everyone.
Good night.